Good morning, hunters, and welcome to the Daily Hunt for Multi-Baggers on this Wednesday, June 10th, 2026. We've got a packed show for you today, diving into the latest market buzz from Tuesday's data.
That's right, Ethan. Our AI has been sifting through a pretty substantial amount of social media activity, flagging quite a few different stocks. We saw some significant jumps in discussion volume for names like PDT and MU, and several new tickers popping onto our radar.
Absolutely. The overall sentiment out there is a real mixed bag. There's some undeniable excitement around AI plays and disruptive tech.
But as always, that excitement comes with its own set of risks, and our systems are definitely flagging some areas that warrant a very cautious eye. So let's jump right into today's market commentary.
First up, we're looking at Super Micro Computer Inc., or SMCI. Our data shows a lot of discussion around their proposed $7 billion equity and equity-linked financing, all to fund what they're calling a $39 billion AI order backlog. It sounds like a company truly investing in its future as an AI infrastructure juggernaut, Plus, their revenue growth has been exceptionally high, over 122%, which is impressive. And get this, insiders have actually been net buyers over the last 6 months.
Well, Ethan, that sounds great on paper, but when you dig into the user complaints and the market reaction, it paints a very different picture. Social media discussions are rife with accusations of shady accounting and book cooking. Many are calling this $7 billion raise an AI money grab that's going to significantly dilute shares. The stock tumbled after this announcement, indicating immediate market disapproval. Their debt-to-equity ratio is alarmingly high, at over 120.
Now for a potentially brighter spot, SanDisk Corporation, SNDK. While the social media chatter is neutral, mainly mentioning it as a component supplier for AI, the fundamentals look compelling. Mitsuho just upgraded their price target to $2,200, and there's talk of a new business model boosting profitability. Their net profit margin is an outstanding 34%, and operating margin is almost 70%. That shows incredible efficiency. Plus, insiders have been net buyers over the last 6 months.
Those are certainly strong profitability metrics, Ethan, which is great to see. However, we also have to acknowledge the high PE of 56 and a PB of 17.68. Those are hefty valuations, especially when current revenue growth is a relatively modest 2.5%. While the insider buying and analyst upgrades are positive signals that could indicate future growth acceleration, a moderate debt-to-equity ratio of 1.5 also warrants consideration. But the market commentary suggests the underlying strength and new business model are driving these high expectations. Our past ratings for SNDK have been a real mix, but there have been recent buy calls.
Given the strong profitability and those positive signals, even with the valuation,
I think we can say for SNDK, the AI-generated insights are suggesting a buy. The strong margins and positive news are compelling.
Finally, let's look at AST SpaceMobile Inc., ASTS. This stock has a very bullish sentiment among users, being called the main horse trading blows with Starlink in the direct-to-cell race. There's a lot of excitement about the anticipated SpaceX IPO lifting the whole sector, and ASTS has critical Bluebird satellite launches scheduled, which are seen as key investor turning points.
It's an exciting narrative, Ethan, but a very high-risk one. ASTS is currently not profitable, with negative EPS and a net profit margin of 0. Their debt-to-equity ratio is extremely high, over 112%, reflecting the capital-intensive nature of space ventures. And critically, insiders have been net sellers, divesting over 2.4 million shares in the last 6 months. While the stock has seen significant historical growth, the current financial health combined with insider selling presents substantial risks. Our previous ratings for ASTS have almost consistently been stay away or speculative gamble.
So a lot of long-term potential, but a very risky road ahead.
For ASTS, our market commentary suggests stay away for general investors. However, we note this does present a high-risk, high-reward scenario for those with a strong appetite for speculation.
All right, hunters, let's quickly recap today's candidates based on our AI-generated market commentary. Investigate as buy. SanDisk Corporation, SNDK. Investigate as cautious buy. None. Investigate a speculative gamble. AST SpaceMobile Inc., ASTS.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions.
We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for joining us on the Daily Hunt for Multi-Baggers.
We'll catch you tomorrow with more insights. Happy hunting!